Give us sort of your broad takeaway here after these headlines.
Yeah, I mean, look, the guidance seems to be light, but it's not surprising because all the social media platforms have two headwinds right now. One is the reopenings in general is hurting engagement. And then IDFA was, just a big headwind overall in terms of, your ad optimization and measurement. And that's going to hurt everyone across the board. Probably the likes of Google, with Alphabet and YouTube, they have more leeway in terms of first-party data, so they will do well. Overall in terms of handling the IDFA situation, but I think the smaller ones are going to get hurt, and that's what you're seeing in this.
I'm wondering, Mandeep, if we focus a little bit too much on those active user numbers. I know that overall, as a metric, you need something to sort of peg progress on here, but I know you've talked, and a lot of other analysts have talked about the idea of just how much engagement you're getting out of those users, and more importantly, how well the company is able to monetize that user base.
Well, so look, this is a very competitive environment now. You've got TikTok, which is clearly gaining market share. And so what it does to all the smaller players like Snapchat, like Twitter, and like Pinterest is it's taking away some of those user gains that they would have seen otherwise. So this space is getting crowded. I mean, and plus you have this headwind from reopenings where users don't want to spend time, consuming social media. They're doing other activities. And so overall, you have this headwind that I don't think is going away anytime soon. But look, these companies, digital ad companies, have the advantage of data. That's what makes their ad targeting better than linear TV. So that advantage will remain with the larger companies. It's just probably we are looking at some sort of consolidation in this space right now.
Mandeep, by my count, this is the third consecutive quarter in which we've been somewhat disappointed by subscriber growth or user growth at various social media platforms. I mean, it may not have been Snap 3 quarters ago, but many of the companies have been telling us that, they're not getting the user growth that they had in the past. Are you surprised that the market continues to react as it does? I mean, it seems that there's a bit of a disconnect here, because 3 quarters straight would seem to get priced at some point. What's the difference between the sentiment right now in the market with respect to subscriber growth and the actual results?
Well, so clearly there was a pull forward during the pandemic. These companies were growing at 50% plus. They pulled forward user growth as well. So now they have tougher compares. But overall, I do think, with Snapchat or with Pinterest, clearly market is confused, because if you look at Snapchat results last time around, the stock dropped 30%, then it jumped 60% the next day. So there is a lot of confusion in terms of the medium to long-term growth prospects of these companies. And I do think consolidation will play out eventually if we keep seeing quarters like these.
Mandeep, just doing sort of a quick search here through the press release, augmented reality has been mentioned over and over again, sort of as a future product engagement here for this company. How are you thinking about AR and the ability to leverage that and monetize it?
Well, it is clearly a theme, and we heard a lot about metaverse, in the last 6 months. But that theme also seems to be slowing down with reopenings. Again, the timing of it or anything to do with, new technology related to social media or, just sitting at home isn't going to do well. So metaverse, augmented reality will play out, but we are talking about, 3 to 5 year horizon as opposed to having an impact in the next 6 months.